Today on the CEO Barbecue, we're looking for gold in Quebec's Abitibi Greenstone Belt together with Maple Gold Mines. And if you want a bullet point summary of this conversation and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, the company you're about to hear from has paid us for the production of this video, which means that this is not research, it's an advertisement, and you should treat it as such. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. And please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased in multiple ways. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Maple Gold is listed as MGM on the TSX Ventures Exchange, where the 3-month average volume has been almost 550,000 shares. With a market cap of just under $35 million and 456 million shares outstanding, today, this is a 7.5-cent stock with a 52-week high of 10.5 and a 52-week low of 4.5 cents. The 50 and the 200-day moving averages here are at respectively 8.2 and 6.9 cents, which means that the stock is currently in a long-term upward trend, now trading above that 200 DMA. But it is below the 50 DMA. Now, Kiran and I have had multiple conversations over the last couple of months, so there's no full financial breakdown needed here. But if you're new to the story, I'll link a playlist containing all the previous and future conversations with Maple Gold in the description of this video. So please do go ahead and watch that. And of course, go to setterplus.ca for the official filings as well. Just briefly, though, Maple Gold Mines is an advanced gold exploration company, and its flagship asset, called Douay, has a 2022 resource on it containing just about 3 million ounces of gold, mostly in the inferred category, and they're mostly at about a gram per ton. The 2025 drilling, though, pushed the story underground with step-outs well below the old pit shells with some higher-grade hits, suggesting the potential for an open pit plus an underground operation centered around that Agnico 531 and Douay West zones. And of course, we'll talk about all of that in the conversation. Currently, they're guiding an updated resource in the latter part of this year, so there's plenty in here to talk about, which means it's already time for me to shut up and Kiran give you the word here. But first of all, thank you for being here today.
Thanks for having me back, Antonio. Great to see you. Hope you're having a great summer and looking forward to getting into all the good things we're doing here at Maple. We just completed a great drill program and we've got a lot more coming in the second half. So look forward to getting into it with you and hello to your audience as well.
Well, pleasure is all mine. I am looking forward to the conversation. I've actually had a couple of interviews canceled this week already, even though it's only Tuesday. And I suppose it's because people are on vacation, but you don't look like a guy who likes nice weather. You prefer Vancouver, I assume, or...
Well, it's a poorly understood that Vancouver can be quite beautiful in the summertime. So I do like nice weather, but I like to work, right? And that's we have a lot of activity currently within the company. So and as you know, it's when it's on, right? The market's on, and there's a lot happening here. It's exciting to be back drilling, doing good geology. So you got to take care of yourself too, but I think we're all excited about what we're doing here. So yeah, no vacations here this week.
What have you done then recently? And let's kind of maybe set the stage, and then we'll go into the details. But what have you done for shareholders since the last time we spoke, which was about 4 months ago?
Yeah, so I think the last time we chatted was right after we made a very spectacular sort of initiation of our drilling activities for the year. We came out with our first 5 holes. One of those was a barn burner. It was hole 338 in the Nika zone, 2.1 grams over, almost 109 meters with some very high grade within and in a big step out. We continued on that, right? We don't just stop and say, hey, let's rest on our laurels and look at one singular result. And we put out on, July 15th, we put out the remaining holes. It was 16 holes. We adapted the program. We had follow-up holes on the success at the Nika zone. We also had similar down plunge step outs that we completed, particularly in the 531 zone, where we had a high hit rate, particularly high grade results, which we'll get into. But in addition to putting out those 16 holes, which again had a high 100% success rate, which were executed on time, within budget, actually slightly under budget, with great safety and operational excellence, which is consistent with what you would expect when you have a large partner and a lot of eyes on you. I think the team did a great job. We have a forthcoming resource update, which we've been working with the engineers on. I'm sure we'll talk about scoping some of that. We also have been speaking with some engineering consultants regarding potential development scenarios and starting to scope out, do some engineering trade-off studies, things like that, that will, be supported by the resource update and help give us a path forward to, what we see in terms of a development scenario for Douay and potentially Joutel. And we were in the midst of a summer program. We did a Sonic program that was looking at advancing some of the higher upside targets to the east of the Douay resource that were greenfield. We did a field mapping, sampling, and geophysical program on the western half. So it's been high activity levels for us, but in terms of what we've done for shareholders, we've stayed on budget. We're well positioned in terms of cash. For the year as we had guided, we're fully funded, and there's a lot more coming in the second half of this year. So.
Well, you have come under budget and all these things, and I do want to talk about some of these details. Looking at the share price, though, it's not tracking gold or the GDX. Like you'd expect gold stocks to be up. A lot of them are not. Maple Gold isn't either. What's going on there? Any read on the share price performance here?
Yeah, listen, I think share price is something we can always look at. I think I've started our interviews talking to you about building a good fundamental business, right? I want to deliver returns to shareholders. That is the job. Sometimes these junior companies, especially ones, this was not a clean company out of the chute, where, you're just starting with, the ideal cap structure, the ideal team, we have the ideal geology, and we certainly have the ideal partner. But there were a lot of things that needed to be cleaned up. Remember, this time last year, we were really just looking at a reset of the structure of the company, right? And thinking about how we raise capital for the company. And, we were trading, at 5-6 cents, and we got Agnico to see the value clearly that they'd seen all along, but we're operating a lot more lean. We're operating with a better plan. And so they invested at a premium. We raised additional money. We put out that first drill result, and we surprised a lot of people because I think, the market looking at Maple had sort of heard a lot of arm waving about geology and potential and had not really seen that delivered via the drill bit. So I don't think people expected that we were going to deliver those kinds of bigger step outs. We followed up on that with some excellent, again, we're 600 meters of defined mineralization down plunge at the Nika zone. We're 200 meters down plunge of the pit bottom in the 531 zone. So we continued to deliver. And look, I think there is a bit of wealth transfer here going on because I've seen you mentioned the trading volumes. If you look at what we traded on the day we put out our last PR in July, we traded another 6, 7, 8 million shares on the venture. We've traded almost 70 or 80 million since we started releasing results in April. And, a lot of that is an indication of, some retail hands that, you never understand the reason sometimes why retail is selling. But I have seen, accumulation because I obviously work the phones, which is a bit of a differentiator. And we've seen a lot of accumulation on the part of, institutions and long-term sort of strategic investors. So, look, there's a bit of churn. We're obviously, I think, are in a momentum and catalyst driven environment. So we think we are one of the best value opportunities amongst the junior gold explorers and developers. But, that's obviously to me, I think that represents huge opportunity, right? Trading at $8 an ounce with all the boxes that we tick, which I'm sure we'll get into. So I think it's coming is what I guess the short answer to that is. It may not be there yet, but when you see gold prices maintaining their, near record highs, partners like ours and other large gold companies that are generating record free cash flow, and the relative dearth of, I think we're one of just a handful of companies with a 3 million ounce plus resource, in Canada that has road and power infrastructure with it. So I think, we warrant certainly a re-rate from where we are today. And obviously we're doing the things that we can do to try to generate that.
I can see by your SEDI filings that I've got here in front of me that you were in the market last month, I think. Yeah. So early last month you were in the market. Is that something you want to keep doing, or do you have the ability to keep doing that and support the stock in the open market as well?
Yeah, and I think that's also maybe not well understood by the market. So let's cover that. Thank you for bringing it up. I mean, we as a company, certainly I take portions of my my paycheck and I buy in the market on a regular basis. It's part of our employee share purchase plan. It's something we initiated to obviously generate alignment between our employees and shareholders, and give our shareholders, our employees particularly, a chance to benefit from the good work that they're doing. We see 100% participation rate amongst our employees, and they're able to allocate a certain portion. And so I am stepping into the market. Obviously, even beyond that, I've bought all of our in our last financing in November, I bought, again, I'm not independently wealthy as I think we've talked about in the past, but, I certainly am a big believer in the opportunity. We as a company really promote and encourage our employees to be shareholders, just to think about this business and running and being a part of a public company. We all work on behalf of shareholders, right? So we have to be good stewards of capital, and we have to support the company where we can. And certainly we see the same thing that you're seeing in terms of undervalued. If I sat here and I told you I think it's undervalued, but I wasn't buying stock, then that would be a bit of a mixed message, right?
Well, you would give me a great opportunity for a comeback question, because that's something that I always do when people say it's very undervalued. Most of the times I ask, like, well, when are you going to be buying? Then in that case, again, definitely want to get into some of the specifics here, but just briefly, how much money do you have left now?
We're currently sitting on roughly $4 million. Our last reported, we'll be coming up on reporting our Q2s. But I'll say that as of, June 30th, we were sitting at 3+, and then we received some tax refunds from the Quebec government. It's one of the benefits of working where we do is we had mineral exploration tax credits coming back. We've made our filings and we got payment within 2 weeks, which is great, great turnaround. And those were almost $1 million coming back to us. So we're sitting at just about 4 million as of today. And again, the majority of the drilling work, from the early part of the year, that's been completed. So we're staying lean and mean. Field program, sonic drilling. I mean, we'll talk about why we did that. The bang for the buck on sonic drilling we decided to do. It was way more than what we would have gotten if we had just drilled 1 or 2 diamond drill holes. And we got a lot more useful information to advance some high perspective targets. And so, I think the second half of this year, we do have some drilling planned. We mentioned that we had a maiden program planned for Joutel. But as I said, I think in terms of where we came into this year, what we had guided towards and where we are at as of today, we're on track.
I want to talk about Joutel. We'll do that toward the latter part of the conversation as well. You have a small program there that you're talking about, but you want, as far as I understand it, just going forward, you want 25,000 meters of drilling per year. Which, again, even if you're able to keep the same cost as you've done so far, it's again about $300 a meter. That's still what $7.5 million, if I have that correctly, on the drilling alone, right? Throw in some G&A in there, met work, some engineering, what else may have you. In the meantime, you're going to need 8 figures here quickly, right? Where is that, or the rest of that money, where is that going to come from? I guess it's straight equity, JV, an option agreement, something else. How are you thinking about financing?
Well, I'll take it in the reverse order. The JV is something we just got out of, so I don't think there's any interest in getting back into the JV unless Agnico sees the upside and decides to exercise their back end, which certainly they have the ability to do. We showed that Agnico, the funding model with Agnico shifted last year, and I think rightly so. I think with 100% ownership of these assets, Maple can drive the assets forward, both from an exploration and a development standpoint. With Agnico participating at the equity level, which I think is, when equity investors are obviously looking for quality filters to understand what is it that Maple has, why is it trading for, $7, $8 an ounce, $35 million market cap with all these boxes that it ticks? And it helps that, Agnico's writing checks, supporting us and doing so at a premium in the case of their last investment. Since we put out our drill holes, I think you and I have talked about, what our junior company marketing budget's like. And I've always felt that you can't push water uphill. If you don't have news to talk about, if you don't have anything new with the company, marketing is never a lifestyle exercise where you're just flying to, these exotic destinations on the guise of actually talking to investors and driving value. I've taken that same approach of, the way we look at exploration, driving return on investment and looking at demonstrable results from, the exploration and the good geology and best practices that we're using at site. We're using those on our marketing side as well. And so I've marketed with almost 35, maybe 40 institutions. We have great support. There has been great research coming out from Agentis and Paradigm over the last couple of press releases on what do these results actually mean from a big picture standpoint. We've had both sort of dealer broker led marketing, and we've set up our own a lot through Canada, a lot virtual, and some even through the US, and gotten a lot of positive feedback on people that weren't really aware. Maybe some people tangentially knew the name Maple Gold, but most of it, unfortunately, was in some negative. There were some negative connotations around it, and those are the kinds of opportunities that I see as when you ask about valuation. I mean, some of these things, when you have a legacy company, right, you're changing hearts and minds, right, and the only way you do that is by communicating, listening as well. 80-20 rule would always dictate. Certainly, I'm always on the spot to try to communicate what we're doing here, but I've really listened to the investor base that we've met with and find out, what are big institutional funds looking for in terms of the quality of companies that they'll invest in. Obviously, we're in this sub $50 million market cap, which you'd call purgatory, because there is a world of haves and have-nots in terms of capital. We've done a great job. I mean, we've gotten, $10 million plus. We've got visibility on additional. Obviously, we want to see higher share prices that reflect fundamental value, but in terms of getting the capital that we need to advance exploration, we've ticked the major box, which is that we can take the $10 million that we had, we can execute a program, we can do it on time, do it under budget. The new norm for drilling for us should be $300 per meter. We're delivering results that actually materially expand on the resource base with quality ounces. And so I think I expect we will have the budget that we need to do those 25,000 meter programs, because geologically, this is certainly a project that warrants it, right? If this were, held in the hands of a much bigger company, just based on what it has, the endowment, two known gold occurrences, straddling a first order structure in the Abitibi with infrastructure. I mean, this would be getting big exploration budgets, right? So we're doing the best that we can with minimal dilution to shareholders, which is important.
Yeah. When do you think the first drill rig is going to be turning on kind of the meat and potatoes here? So not Joutel, but everything else. That's next year, I suppose. But when do you think that's why I'm asking that? Let me maybe tell you that as well. It's like, I'm thinking, where's the money going to come from? But also, when are you going to need that money by? So that's why I'm asking here, really.
Sure. So I think the goal with the success that we had at Nika and 531, I mean, we're planning right now to do immediate follow-up, right? And I think we've got, because we had that 3,000 meters of budgeted room, it can be deployed either at Joutel or at Douay. And we have some things, for example, if we have visibility on a resource that, gets close to our goal of getting this deposit from 3 to 5 million ounces, but with a bit of incremental drilling in some of these newly defined areas where we see, bulk tonnage underground potential and higher grades. If we can do a bit more incremental drilling, because we can drill at the 531 zone and the Nika zone, we can drill some of those areas year round. We don't necessarily need to wait, while the majority of the Douay project, we need to wait until the ground's frozen. So you're correct in saying, most of that drilling will be, from January on, which as similar to this past year when we started in mid-Jan. Unfortunately, the winters are getting a little warmer, and the length of the cold snap is typically not as long as it was. So those hard freezes that we like, we have to really work on logistics and planning to make sure we can get as much drilling in a relatively short period of time. So. I just to answer your question, I think the meat of the drilling at Douay will be, in the new year. But I think we're going to be doing some follow-ups to look at these high-grade zones that we've newly identified at Nika and 531. And then Joutel as well. I think there's some things to talk about there in terms of what we repatriated in terms of data from Agnico, what we've done with our resource modeling exercise, the potential for a first-time resource inclusion of Joutel in our forthcoming MRE update. And again, similar to what I just described at Nika and 531, if there are some areas that we can drill at Joutel that could give us better data, better information, and guide a more robust resource, then those are things we're going to get into, starting this fall. And Joutel also happens to be high and dry, so that's also a place that we could drill year round. So I expect, again, we're not going to stray from our initial, like, while there's excitement here on the new zones and what we're doing at Douay, we're building a long-term fundamental business, right? So we're not rushing. I know the market will sit back and say, okay, what's next? How much more meters? When are you going to drill your 25,000 meters at Douay? The conditions have to line up, and we do have a few more catalysts coming. I think maybe there's some impression that we put out all of our drill hole results and then it's sit back and wait and try to finance. And, so sometimes you get some nefarious activity in your stock as a result. But in our case, I think we've got patience because at the end of the day, the way we want to advance this is in line with other high quality projects in the Abitibi. We're not just going drill hole to drill hole and trying to push the stock up just so we can raise capital to keep the lights on, right? We're really trying to fundamentally add value to the projects from a long-term perspective.
Are you still going to be on time though? If Joutel is going to be part of that new and updated MRE, can you still have it out before the end of the year?
Yes, in fact, we did talk to SLR last week, and we're working with SLR again. We're pleased they've done the last two when they were RPA. They did the 2019 pit constrained resource. I worked with them. I wasn't part of the company in 2019, but I was in 2022 when we and Agnico worked with them to come out with the resource update as under the rebranded SLR moniker. And it's a great team. It's the same team, so they have continuity. They did come out to the property while we were drilling. And we have guidance from them that everything that we're planning and doing is on target for delivery by year end. So if we do some additional drilling and we are successful there, I think most people would agree that if you have a lot of success, we're always the plan is always subject to revision, right? In the sense that if we hit a screamer drill hole in a zone and we want to further define what the tonnage and grade of that zone might be. Rather than just put out a resource update just for the sake of saying, okay, we did it on time as we guided, we reserve the right to come back and say, listen, we've got a new zone. We want to incorporate that in. But as of where we're sitting today, I see no issues with delivering a resource update by year end.
Have your expectations for size and grade changed, though, after the recent program, but then also after having, taken that decision to include Joutel in there?
Yes, and I think they've improved both in terms of tonnage and grade. I think let's start with Douay. I mean, Douay, where we added materially to what we believe we've added materially to in terms of resource, in the Nika zone. Let's start there. Yeah, that's really of the 3 million ounces that we have on the 2022 resource. That's only 173,000 ounces, right? So it's like 5 or 6% of the overall. I think that there is incremental underground expansion upside. We've got these high grade corridors that we can add to the MRE. We've sketched in an auriferous or gold bearing alteration corridor down to a depth of 600 meters vertically below the pit shell, the open pit shell. And we've actually got some areas that are actually, and when I say there's low hanging fruit areas that we can get back to, if you go back, you look at the section that we put out in April, which showed that on that corridor that we were looking at in the Nika zone between hole, the previous best hole, which was the 282 X hole, the 338 intercept that we put out in April. If you look in the up plunge direction, there's actually a relative dearth of drilling even within the pit, right, along a structure. So those are some of the areas that we think we've added materially. I think the discussion in terms of how many ounces and how much grade we've actually added to that, I can't really get into. But I think in terms of, similarly at 531, that's a zone that only has 270,000 ounces out of the overall 3 million, right? And we've sketched in similar subvertical, subparallel gold alteration zones down to 200 meters below the pit bottom. And it's high grade, right? I mean, you saw a couple intercepts that were 15 meters of 5 grams, 11.4 over 4 grams, 11 over 3 grams. And this is within a deposit that has an overall deposit average grade of just over a gram. So that was the goal of the program. If you recall, when we were originally started talking, I said, look, we're not just focusing on infill drilling a 1 gram open pit deposit, right? We're focusing on showing where we can add high quality ounces and higher grade. So I think in terms of Joutel, we expect to see, it was a high grade past producing mine complex of, 1 million ounces produced at 6.5 grams. And they used, 6 gram cutoff when it was a $300 gold price average. And so I think even with both at Douay and Joutel, when you look at higher gold prices, it obviously leads to slight lowering of cutoff grades. But I don't think we're going to sacrifice quality ounces here. I think the reality is I expect our tonnage to go up. I expect our ounces to go up. And I expect the grade impact to be, maybe slightly down, but relatively neutral, right? Because I think the goal was not to just try to incorporate lots of low grade ounces, just to build something that's of size and scale. I think it's to make sure that we see a path towards, a project that we as 100% owner of these assets can actually advance, right? Without having the huge overhang of, $1 billion, you mentioned our $35 million market cap. I mean, I don't think there's really a goal. While we think there's potential for this bigger system, dramatically so, I don't think there's really a goal here for us to come out with something that's $1 billion plus capex, because as you said, if the stock's under pressure because of the malaise in the junior market and the market not waking up to fundamental value, I mean, imagine if you put out something with a massive capex number. I mean, you just have perennial overhang to deal with. So, and what's also interesting, I should probably give you a chance to jump in, but what is also interesting is, we're not just exploration, right? Sometimes these stocks are trading their torquey exploration. There's companies out there that have put out great drill results and they trade up from 20 million market cap to 150 million, almost seemingly overnight. We put out great results and we do have a fundamental project here. So it's all these things that we're doing. They're building on an already established resource base that's high quality. And when we're doing things at Joutel, for example, I would say with our $7 or $8 an ounce valuation, it's just on the Douay ounces. It doesn't include any value. We get zero value for Joutel, as well as for exploration upside across the property. So,
is there a number that you could stick to? Is there something that you're guiding publicly as to how big it could get? Like, I understand you don't want, it's not going to be $1 billion capex, but something more concrete or a range or something.
Yeah, listen, I mean, in terms of resource size, we've always guided towards, while others can make comments on what they think the size of the overall, I mean, this is a alkalic gold system on a major structural break, which has lots of endowment upside, right? We have guided towards growing this from 3 to 5 million ounces. I think that puts us, we're already in rare territory at a 3 million ounce plus deposit where we are. If we grow it to 5, that just puts us in even, rarer territory in terms of scale. And in terms of production size, I mean, that's the other thing for us is, if you look at what is a major company size project versus what is a buildable and, relevant project for a company that's in our snack bracket, right, in terms of market cap. I mean, the rule of thumb was always sort of 100,000 ounce of production over 10-year mine life, pay back your capital early. And, a lot of these deposits in the Abitibi, not many of them start with 300 or 500,000 ounces of annual production, right? A lot of them start with 100 to 150,000 ounces of production. You get into the meat of the deposit, you start paying back the capital, and then it becomes more of a self-sustaining. To your question before, how are you gonna do those $25 million programs? I mean, if you're 25,000 meter programs, if you at least show a path that there is some development potential here, of call it 100 to 150,000 ounces of annual production over 10 years of mine life. That's not small, right? That's 1 million to 1.5 million, ounces of producible gold. I think that would be a great target for us. And I think if you start your audience and you're a financial guy, you can start doing back of the envelope sort of NPV numbers using, average mine cost, assume a conservative gold price, use a 5% discount rate, things like that. Remember, Agnico has a back end right that's tied to a $300 million NPV and a pre-feasibility study. So this is not just an arm wave to kind of get people saying, hey, we're going to go build a project. I think when we look at trying to lower our cost of capital, the things that we're doing both on the exploration side, but also on the development side, are designed to show what a quality project Douay and Joutel is, so that we could get a higher share price, a re-rate in line with our peers, outperform our peers, and then be able to raise capital at lower cost of capital. So I think the forthcoming studies that we're doing on engineering trade-offs, that's going to be internal, right? So we don't want to rush a study, but I mean, we've had our engineers do a gap analysis, look at the metallurgy. We don't see any fatal flaws. Obviously, we've got some very good technical people here that, are also similar, seeing the same thing. So assuming the trade-offs, which I also think we'll be able to complete by year end, if we were to start from that point and say we're going to do a PEA on this, I think we'd be reasonably able to deliver that by mid next year. And I think these are big catalysts. This is a far cry from where we were when I took the reins, which was lots of arm waving on, exploration upside, but not a lot of de-risking of the deposit.
Doesn't seem like you want to box yourself in with a number there, though.
Yeah, listen, I think it's too early to say, because I think you see what, and it's not I'm not trying to obfuscate. I think the reality is you do have a big system, and our Douay pit constrained resource is 6 kilometers by 2 kilometers. If you start thinking about what you could be doing in terms of, similar deposits, I look at, Mayfair Gold, which is a $300 million market cap, the Fengiv project. It's got a cutoff grade of 0.3. We use a 0.45. So we're, 0.15 grams higher in terms of cutoff. And, you start thinking about what the configuration is, what the shapes of these pits looks like. We could go with a kitchen sink model and just say, hey, listen, we're going to build this big, and hope that somebody sees that potential and comes along. But I think, again, the reason why we do trade-offs is to make sure that we understand internally what is driving return for shareholders in terms of, is it better to build a mill here versus utilize existing capacity in the region, right? Is it better to whole or leach what we have here, the Douay mineralization, or is it better to do a traditional sort of, gravity flotation cyanidation type process? If you're going to transport, you look at sort of toll milling or direct shipped ore, are you looking at, hauling it over the road in trucks? Are you looking at utilizing some existing rail capacity in the region? That's the beauty of having infrastructure, right? Is you have things that you can flex. And so, I'm not being boxed into a number, but I can tell you that we've seen a couple of these studies come out recently that were, 70,000 ounces a year, at sort of, it's deeper projects that require, direct ship ore and all these other things. I mean, remember who our partner is. Remember, sort of the size of what we're doing. I mean, I think we could seriously getting to 100,000 to 150,000 ounce a year, 10-year mine life type of a scenario. I think that would be a big win for shareholders here on this project. If we could beat that, certainly we will look to that. I don't think we would be going much smaller. Let's put it that way.
But it is what you're going to be suggesting to the board here essentially is a combined underground starter with porphyry 531 Nika and maybe, which we'll talk about later, but Douay West in a single flow sheet and sort of shared infrastructure, or are you thinking separate pit constrained and underground cases?
Yeah, I think that's the other thing we're trying to flex right now is what of the existing ounces is going to be open pittable. And we've got let's just take the example of Douay West. There's 500,000 ounces of indicated there at higher than the deposit average, so at almost 1.6 grams per ton. It goes right to the top of bedrock. There's only 20 meters of overburden there. We've had recent drilling success at Nika. You start looking at that area between Douay West, Nika, Northwest Zone. If you can sketch in 1 million ounces there as pittable, you start looking at the rest of porphyry, 531. Those kinds of deposits, while I do think we want to wait and see what the numbers come back, we don't want to have a super high strip ratio type open pit, giant hole in the ground type of an operation. But the gold price does do a lot of things for economics. So I think these trade-offs and what is open pittable, and that was not done, by the way, that was not done in 2022 when they did a pit constrained resource, and they did include some inferred underground. Those are really same block size, which is kind of cardinal sin. You're not obviously going to use the same modeling for underground as you're using for open pit. So we're doing much more detailed, analysis and modeling of what is potentially underground mineable. And, I think the combination to me makes the most sense here because there are some areas where you do have higher grade, but you do have a lot of material to get through, both in terms of, overburden, which is thickening as you go to the east, as well as, like in the case of 531, if you look at our long section, you can see that the meat of the high grade mineralization is actually towards the bottom of the pit, right? So that's a relatively high strip type of pit. We're looking to optimize. And that optimization exercise, I expect we'll have a lot more to guide on that when we get into latter part of this year.
Mm-hmm. The way it is now, though, what zones do you think will kind of years 1 to 5 come from? I think I've heard you refer to that before. It's kind of trying to figure that part out. How do you see that?
Yeah, I think, like I said before, I think you probably heard me say that I think we have, with 3 million ounces, I think we have years 5 to 20 of mine life. It's really trying to make sure we've got years 1 to 5, which are those critical years of paying back capital. And as I said, I think the western portion of the deposit, where your overburden thickness is lower, your grades are up. We've shown that there's success here at Nika. I think really all it takes, that's why we want to do immediate follow-up at Nika, is we're not just looking at a point to a point, and that's the line of high grade gold mineralization. This is a corridor, right? And
Mm-hmm.
so what we've done is we did some follow-ups. We hit a great follow-up hole in an extension hole 54X, which was it was 2 grams over 30 meters, 60 gram meters. It tells us exactly where we want to go next. We've shown that in some of our press releases as to what phase 2 targeting is going to be. We have success there. If you put that together with what we already have at Douay West and Northwest, and what we currently have in the pit at Nika, I think that would make for an excellent potential starter operation. And we're not the only ones to have seen that, because on top of the Douay deposit is where the current head frame, if anybody's familiar with the company, they've seen that picture of the head frame that sits there. There's no reason to build a head frame unless you actually plan to mine. And the old saying of, the best place to find a gold mine is in the shadow of an existing head frame. And we had the head frame there. It was built by Orezon in late 1990s with the intention of going and mining at Douay West, right? And that was before a lot of these other zones had been discovered. So, what we'd like to see is, let's get this towards something that looks reasonable in that earlier guidance that I gave you in terms of production size and number of years. But I think the exploration upside is, we really just started to scratch the surface, right? With a better team, better model. So I think that western portion is what I'd be focused on, really, from a early mining scenario. Now, I reserve the right to come back to you and say, like with these trade-offs that we're doing with the work that SLR is doing, if we think that this entire deposit should be mined as a bulk tonnage underground, I'm going to come back to you and tell you why, right? I think right now I don't like to arm wave, especially, like, I'm an engineer too, so I don't like to arm wave on engineering. You need to have it's got to be process and data driven. I think I have got a gut feeling of what I think actually makes sense here, but we've got a great team and some good consultants that are working on that issue right now, and so that's the purpose of doing both a resource update, but also a resource update that can help to support a real, like a geo mine met model that helps you to put together a credible PEA, because some PEAs aren't worth the paper that they're printed on, right? And that's the reason why, our partner, when we were looking at back-end structures, things like that, I mean, it was a comment that came back to us that, whether it's a PEA, PFS, FS, it's got to be tied to a construction decision, right? And because if you're not prepared to build it, it's kind of like our question about, if you think your stock's undervalued, how come you're not buying stock? If you think you got a high upside feasibility, et cetera, if you're not making the decision that you're going to put it into production, why did you go through and spend all that money and capital to do it, right?
Yeah.
So I think that's the goal, is we don't want to just say, hey, we've got PEA level data and then rush a PEA. I think we want to put out a PEA that can immediately support the next step, which is taking it to a PFS and having reserves right on the property.
Well, saying that some PEAs are not worth the paper they're printed on is actually putting it mildly. I think, like, if I were to be blunt, I'd say most of them really aren't. I see, Christian, and this sounds a bit off topic, but it really isn't. And then you'll see why it makes sense. But I see that you've issued some options in RSUs. Is executive compensations going to be changed now to reflect that potential success? And when I say potential success, how do you define that? Is that having a bigger MRE, or is it having discovery success? Is it a combination of both? How do you see that? And how do you compensate the team properly in the back of it?
Yeah, I think we've done more in during my tenure as CEO. I give a lot of credit to our board, our chair of our comp committee, and my whole team. We actually set up a real, you know, we went externally. We had a group do a external sort of compensation survey, benchmark us relative to the peer group, and look at a nice mix of what is sort of salary ranges for different positions. What is long-term incentive compensation, which is the shares and RSUs and options, and what is the sort of short-term, which is sort of bonuses, and how do we structure compensation to both retain a high caliber staff. As you know, we're a very lean team. That's one of the reasons why we've been able to keep our costs in line is, while you see that our costs are down, we're delivering more. We're doing it with fewer people than Maple has ever done before. And that means that puts a lot of pressure on certainly my team. We try to reward and incentivize our team to work smarter, not always just harder. We do have a very hardworking group. And so when we did issue our options and our RSUs, there was a process, right? There was a process of, evaluating both individual and company performance, where we think the stock is valued, and what we thought was in line and commensurate with not only our KPIs that we've set and achievement of objectives, but also, what we think is reasonable from a company of our size in terms of issuance, in terms of, making sure that there is enough incentive for everyone to work on behalf of shareholders, but that we're not just issuing at a low share price. We're not just issuing a bunch of cheap options and things just so that we have a lot of dilutables that could potentially come out into the market. And as we go forward, look, I think the goal is always going to be, as I mentioned, one of the key ways that investors can see that we're not just sitting here working for salaries and options and RSUs and not putting money into the company. You can look at SETI, you can look at how the trends of actual ownership in the company have increased, certainly on over my tenure. I have not sold a single share since I've been here. And that's a big difference from, I think from, the way things used to be. I don't take money out of the company. I put money in. And, in terms of where we sit from a compensation philosophy is something I think every company, junior company has to decide for themselves. But I certainly think that with an undervalued share price, this is a hard business. If we have the kind of return potential that we believe we do, being able to have our team participate in that, they're generating obviously all the efforts to try to get this re-rate and get the 10 bagger type potential that we think is all of us think is here. If that works, then people should benefit from that. But I'm focused more on seeing the shareholders benefit, right? So I think if I have a full team that's aligned with the vision, we've taken a tanker ship and really turned it around 180 degrees. And trust me, there were a lot more options, RSUs, and other things being issued previously than are being issued now because we have a better framework, even though the price is lower. So the value of those options, RSUs, and things is much less than what it was. But we're still making sure that people have the right incentives aligned with shareholders.
I do want to get into some of the specifics here, so let's maybe do that.
Sure.
And also because, again, more specifically about the underground thesis here, both at 531 and Nika, what that might look like. Do you think grade continuity might be a challenge here? Again, we don't have necessarily the true widths here either, but talk to me about that grade and width continuity. Could that be a challenge when trying to put those intercepts into a resource?
Listen, it's a great question. Nika, I started saying that, this is a big alkalic gold system on a major break. It is associated with this intrusive complex, the style of mineralization that we showed at Nika, both with the 282X intercept as well as the 338 intercept. These are consistent, thick, broad zones of mineralization. Those typically don't occur in isolation, right? There are corridors. Obviously, we did a couple of step outs and some follow-ups to try to vector and figure out what's the geometry. But once you're into a zone there, you're into a zone. This is not what we call a vein hosted narrow width type a system that we're looking at. At 531, you do see some, while they're still thick, they are sort of subparallel, subvertical, alteration and structurally driven corridors. Some of those are sedimentary interflows. Some of those are, just driven by, what we see as good structural traps for higher grade gold mineralization. But I think we're looking at a big system here. We're not, if you compare it with some companies that I think you cover as well, where they're just chasing a singular vein going down, 2,000 meters deep, and their vein width is 30 centimeters when a minimum mining width is like underground is 3 meters. That's not the type of deposit that we are looking at. I think from an underground, not as this is going to be a narrow vein, selective mining scenario, right? We look at these types of underground trade-offs and what we're doing as it's more of a bulk tonnage scenario. So big, big tonnage coming through, maybe a portal, maybe a ramp, with mechanized equipment. I think that's the kind of thing we're looking at. We do see the consistency of mineralization. If we find more of that tonnage and more of that grade, I think it's game on for us, to be honest. I don't see the issue being, oh, well, we're only in these isolated pods of, and if that's the case, then maybe that doesn't lend itself to that bulk tonnage scenario, right? That's part of this trade-off that we're doing right now. And again, it's because it's early. That's why I'm not to confuse, but if we're just starting to think about what is potentially underground mineable, and then we're having similar underground exploration success, because again, when we're hitting, 2 grams over 100 meters or 3 grams over 50 meters or 5 grams over 17 meters, you can underground mine those at these gold prices in the Abitibi with infrastructure. You can underground mine those all day, every day, right? You look at some of the comparable projects. That's important for your readership, is compare what are the typical underground grades that, are being mined at, whether it's Odyssey or East Goldie or Island, Gold, Alamos's project, right? I mean, the grades aren't eye-popping, right? They're not like, 10 gram plus underground mines. I mean, some of these things, if you have enough tonnage, you can mine successfully at, 3, 4, 5 grams. That's what we're looking for, right? As a potential underground mining scenario at Douay. Joutel is a bit different, obviously. That's it's a VMS system. It's exhalative. So there's potential for subparallel zones and things like that. But I think we're not worried. What we're seeing right now, based on not only the core observations, but also the modeling work that we've done, the discussions we're having with SLR and the engineers, we're not worried about grade continuity. We just need to find more of it.
That's actually the last point is actually important, because that's what I wanted to ask you about as well. Given that you now know more about the geometry of the ore body here, what is that grade profile that works here? I mean, is there a cutoff that you have in mind already, or is it too early to talk about that?
Well, look, I think it is a bit early to talk about it, but I don't want to just leave you hanging, right? So I think the numbers I just quoted in terms of, what is underground mineable. And when we talk about underground, think about some of the other deposits in the Abitibi. Some of them go down to 2,000 meters deep, right? And they're still operating, and some of those are run by our partner today. So we are in these areas that I mentioned that we've shown down plunge extensions of higher grade. We're still in the top 500. The whole phase 1 drill program for Maple was in the top 500 meters, right? So I think if you're mining at between 2.5 to 3 grams, if you've got, a million or 500,000 ounces of 2.5 to 3 gram material at those depths, I mean, I think that's a reasonable starting point for a potential bulk tonnage underground. And I think you always have to think about, from a development scenario, because of where this is. Remember, it's a bit of a blind deposit, right? Because there is cover and overburden sitting on top of it. My view is, if that overburden wasn't there, this would probably already be a mine. But that represents opportunity for us, because, it's been held by juniors, and it's sort of people are trying to get their heads around, well, how do you deal with overburden? How do you mine this? And how, you have to pay with an open pit. Your goal of those first 5 years of a mine life is to pay back your pre-strip, right? If it's an underground, you have to pay for your underground development. You have to pay back the cost of underground development. So when we start doing these back of the envelopes on trade-offs on what's open pittable, what's underground, trust me, the wheels that are turning with all of us is, we're trying to say, how much is it going to actually cost us to access the ore zone? And how quickly do we think we can pay back that capital? Because once you've paid that back, everything else is gravy. Right. And so, you're, for example, the type of, and again, one of the things that we're also looking at is, building something that maybe is staged, right? Where you say, okay, the first, 8 years or 7 or 8 years is going to be at a certain throughput. And then you're going to do an incremental build or capex expansion to transition to, a next phase where you're maybe going to ramp up your production or things like that. I think that is how you efficiently design a project. So look, I think what is a grade profile for something that's open pittable? I mean, I think you can mine things that are 1 gram in the Abitibi. I think you can mine those open pit, right? And we have 3 million ounces there. If you're starting to look at bulk tonnage underground, you better have something that's 2 gram plus, right? And you better have good consistency and thickness. Obviously, the deeper you go, the higher the grade needs to be to pay back that cost of underground development. But I think when you look at some of the intercepts that we put out at Nika and 531, you're seeing 2 grams plus in relatively thick, consistent zones, right? And that's what's being modeled up as we speak, where we're going to do immediate follow-up. If we had only come up with, 1 gram material, or, if we had come up with dusters there, we don't go back and follow up, right? And then that's the interesting thing about exploration is there is a bit of a random walk theory, just like in the stock market, right? If think about the Nika zone, if we had drilled, maybe 50 meters to the west or 50 meters to the east, or the hole had deviated slightly differently, we didn't have that consistency and thick intercept that we had in 338. We might not have gone in there with a second rig and done immediate follow-up testing, right? And so when we evaluated, is it worth it to go back and add that second rig while we're doing all these other targets and adjusting our targets at 531 to do bigger step outs based on a better understanding of the geometries and plunges? We earmarked that second rig to go in there because that was a successful hole, and it was building on, a previously very successful hole in 282. We have not killed by any means the potential of that Nika zone. We've only just gotten started, right? And I think you need to drill when you think about, the volume of space you're trying to drill. That zone, Antonio, ready for this? It's only got 6 holes into it. Right. If you start thinking about what the geometry of this potential system is on 6 kilometers by 2 kilometers in this particular area, that is not a lot of drilling. Right. And so I think, but the reason why we go back to these areas is because the grade tells us it's worthwhile, right? The grade and the thickness tells us that this has the potential to be a bulk tonnage underground if we can find more of that style of mineralization and consistency.
What is that minimum mining width, by the way? What would that be for something like and I'm thinking here specifically the halos of Nika, like some of the lower, like 0.3, 0.4 hits there. Any idea?
Well, I think you're going to see this. I'll answer it when we come out with the updated resource, right? I think we've with all the holes that we drilled, even some of these, for example, there was a 100 gram meter intercept, which was 200 meters of, almost 0.5 grams, right? If you look at that from an underground mining perspective, you probably say that's not that exciting, because it's even below the deposit average grade. But if you're going through it on the way to something that's bigger, if you've got those kinds of, the halos could very easily be economic, right? And I would expect that, in terms of proving that there's a deeper system, adding ounces based on the drilling holes that we've done, I think those halos are very much in play. They're not going to be the focal point of mining activity, but as you're sort of looking at a development plan to get to the sort of meat of where you really want to mine, some of these halos could be, increment. And maybe one of the things that you do, obviously from a mining standpoint, is you're not just going to run everything all at once through the mill, right? You might have a potential to do some, ore sorting and some stockpiling, right? So that, even stuff that would normally be categorized as your sort of pre-strip or pre-production, just waste that's sitting off on the side. If it does contain incremental amounts of gold in it, maybe in the sort of tail end years of mine life, I mean, that might be worth processing through the mill because, you got free milling ore, you've got good recoveries. I mean, think about some of the areas at, the Detour mine, they're mining an average grade there of, less than a gram. They're just achieving, it's one of the biggest cash flow generators for Agnico because it achieves both economies of scale and it's got great metallurgy, right? Which, we have great metallurgy here. At least the initial indications are we don't have any refractory ore. We don't have issues with arsenic. We need to do additional metallurgical testing, but gap analysis is showing that, we've got something similar and comparable to other things that are, in the Abitibi that are doing well in terms of metallurgy. That also helps us from a can we ship this to another source and use a direct ship to ore model? Because obviously the nastier your deposit in terms of if there's arsenic, other things, it just makes more headaches for the receiver and the processor of that material. So anyway, I talked about a lot of things there, but I can't give you numbers based until we've done those trade-offs, right? But these are the things that help to guide our thinking. Is continuity, grade, and the ability to not just only focus myopically on, okay, we got this high grade zone. We're not worried about the halos. Like the halos are still important from a broader planning standpoint.
Mm-hmm. I did want to ask about the metallurgy. I know it is too early, so I was just thinking for, early indications, deleterious preg robbing, ARD, or none of that in the underground stuff you see?
We are not seeing any indications of that as of today. We do need to do, I would say, just for, even if an engineer came back to me and said, you have enough metallurgical data, to go right to a PEA, because of what I had said earlier, that the quality filter of, PEAs that are worth, what the work that's gone into them and the paper that they're printed on versus the ones that aren't. I would feel more comfortable. I think we'd feel more comfortable as a company. And that may be part of, you'll see as we start to scope out what the meat of the winter drilling is going to be at Douay. I would expect there might be a bit of met and geotech type, work that's being done just to kind of make sure that we're ticking that box. But I think as of what we've seen based on a great program, and we've got a metallurgist by training on our board who spent years working with Wheaton Precious as both a VP mining and as a technical ambassador. So he's looked at projects kind of all over the world from a de-risking and looking at, is there problematic metallurgy? And, we have not seen any fatal flaws here, red flags thus far.
You're currently doing some met work, or when do you want to do that?
No, that would be part of like some augmenting some of the met work that was done in 2017, 2018. I mean, that's what I'm basing the assessment on, no refractory ore, free milling ore, some kind of combination of either whole ore leach or gravity, flotation cyanidation type of process. I mean, this is one thing this is likely not going to be is heap leach, right? This is we like the recoveries that we're getting off of, from the sort of low 80s to the low 90s, which is typical for this style of deposit. And, I would expect we're going to do a bit of additional metallurgy work as we go forward. If we're going to put out a PEA, I mean, I think we would want to make sure we've got a bit more, just to confirm what was done back in 2017, 2018.
That's right. What is, phase two going to be look like more specifically, though? I suppose you still have to, define that, put a news release on it and everything, but how do you think you're going to split it between NICA, 531 and porphyry?
I think it's going to be all the above, right? I think we've got these new high grade chutes. We're stepping out both up plunge to surface and down plunge. I think the goal, of course, is to show how this deposit can really grow. And not just grow in terms of, more of the same ounces. I mean, this is a different style of deposit. I mean, we can add, I think, low grade along trend and sketch in within the pits and things like that. But I think unlocking the potential value of not only the Douay deposit, but also of Maple and its share price rests with showing that, this is not just a 3 million ounce near surface deposit, that there is it's a deep rooted system. It's something that's got continuity. It's something that holds together, and potentially we see great improvement as we go to depth. We've just started to show that with the first program that's been run by a new team with a new model. So building in phase two, we have to take some holes and drill a bit deeper, right? And when you start drilling deeper, you start, your costs, obviously, things that when you're trying to run a proper business, you want to think about we're not just going to take a scattershot approach. One of the things you notice with this first phase one program that we just recently completed, we did not just focus on a zone and just drill that like crazy, right? We spread the holes out across because we were looking for indications based on a better model of areas that we had seen previous indications of higher grade, or where we had an alteration corridor that we wanted to test. And we put holes. We even took a couple of sort of bigger distal shots on the exploration side, and in the example of Douay Quest, right, which we talked about, and we saw very similar mineralization there to things, for example, like Casa Berardi, right, which are ripe for sort of step out, new discoveries and things that we want to test. So the phase 2 program, while I'm sure everyone is certainly focused on the fact that we've got these two particular high grade zones at Nika and 531 that we are excited about, we want to follow up. There is still a lot of potential within the porphyry zone. There's potential to sketch in within pits, as I say, drilling up plunge. There are still quite a few discovery holes. And again, one of the things that's pending, we should be putting out here within the next couple of weeks the results from our Sonic program. We did find some interesting alteration. It could be, it may be early, so I don't want to arm wave too much, but what if we were able to find the next Douay, right? To the east of the current Douay, right? If you can show that you got the 3 million ounces that's sitting there near surface, you've got a path to extending high grade and showing the guts of, a la Malartic, a la Detour, a la Island, or some of these bigger deposits. And then there's potential to find other deposits across the property. I mean, I think that puts our deposit and our company into very rare territory, indeed. So I think that's really the goal of phase 2, is to show, as we did with our second press release following up on the success we had in April, was to show that this was not a one-hit wonder, right? There are a lot of drill hole companies, we can name a few of them here, where they hit that original hole and then they're never able to follow up with that kind of success, right? And the stock runs and they raise capital, and then what happens? So we want to show, as we did with our July press release, that we hit gold everywhere we targeted. In a lot of cases, we hit high grade and we've expanded zones. I think phase 2 is only going to build on that and show that phase 1 was just a starter, and the potential for this system to grow bigger and achieve what we hope is that sort of 5+ million ounce potential that's there, right? Because I think that will get us. It's got the attention of some of the larger institutional and sort of strategic shareholders. It's got the attention of our partner. We had a great presentation with them to talk about all the work that we'd done last week, and where we go from here. So I take a lot of comfort in the fact that despite the fact that the share price isn't where I'd like it to be, there are some very smart technical people, including our own internal team, but a lot of external validation for the work that we've done, that are saying you guys are on the right path. Keep going. So.
What are you thinking of about drill spacing here, though? And why I'm asking you that is, again, thinking about tightening up, getting the ounces into potentially the indicated category and everything for the underground stuff, but also because I'm thinking about how much of the strike length are you going to be able to drill, and then potentially how much are you going to be able to step out, if that makes sense.
Yeah, I mean, our current resource, why a lot of that is sitting in inferred, is because there are still gaps of 100 to 200 meters between drill holes, right? And that's a lot of real estate, right? So we are not ready at this point, given the fact that we have just begun to scratch the surface of the exploration. We're not ready to kind of go and start green lighting 100,000 meter infill drill programs. To try to bring all of that 3 million ounces into indicated, so that we can support a PFS. It's sort of putting cart before horse. I think the kind of spacing that we've done with the follow-up holes that we had at Nika and the step-out holes that we did at 531. I mean, those are indicative of where we think we can add inferred ounces and start to sketch in what could be potentially bulk tonnage underground mineable. I think the infill drilling that we've done, with some holes that we put into the porphyry zone and some better modeling. I mean, I think we are going to actually see some gains on the indicated throughout the system. But in terms of drill hole spacing, I mean, we're not going to go on a grid looking at 25 to 50 meter spacing across a 6 kilometer by 2 kilometer open pit until we actually figure out where do we want to focus those early years of those 1 to 5 years or 1 to 10 years worth of mine life. If we think those areas are really in the western portion of the deposit. As I said, we're starting with 500,000 ounces of indicated at Douay West. There are some areas we didn't put any holes. You notice in this last program, we didn't put any holes down plunge of Douay West, which is interesting because there is still potential there. And we've learned a lot from Nika to kind of come back to Douay West with potentially with phase 2. But the reason why we didn't go for Douay West is because the upper portion where we've got higher grade, where we've got all their indicators, it's relatively well drilled. And so if we do follow that model where we've got 500,000 ounces of indicated at Douay West, if we follow that model for Nika or Northwest, all of a sudden you can start to see visibility on getting to your 1 million to 1.5 million size target to start anchoring a mine plan. And if we need to do infill drilling there to make sure that, a PEA could lead very quickly into a PFS or something like that, then, that's going to be part of the assessment of future drill programs. But these next drill programs, like the immediate follow-up that we have planned for this fall, the phase 2 drilling programs and the bigger program that we plan to do this winter, it is still exploration drilling, right? It is not just going to be we're going out to try to sketch in pits and other things. I think we're really trying to make sure that we're showing the path for how the resource can grow and improve.
At Douay Quest, though, you follow that mag-EM, if I'm not mistaken, and it turned out to be mostly, I think, graphite. There's a 0.3 gram hit there, but what's the read here now? I mean, have you killed that target, or why not? How do you think about it?
Well, I think it's great. I mean, we intersected, these sort of Douay West type structures and stratigraphy, and then we were 2 kilometers to the northwest of the system, right? So that's a pretty big step out, right? That's like we're going out and again, that's how these deposits were discovered originally, where they looked at geophysical targets that were undercover and they drilled a blind, and we hit anomalous gold in that hole. Is it the kind that would get you sort of, okay, we're going to sit a rig right down on the collar location and just do a bunch of step outs? No, because that the grades didn't give us what we were, that wasn't what we were targeting, right? What we were targeting was, is there a system here that could be fertile to host potential gold mineralization? Is it similar to other things that we're seeing, within our deposit, but also within other deposits on trend? And the answer to that is yes. And so you look at similar targets that we have. For example, when we didn't get to talk about this sonic program that we did, but we also drilled on these grids. We drilled similar geophysical anomalies that were well outside 2 kilometers plus outside of the existing Douay resource. And, the excitement I think that we have over things like that is that what is it? If people see that there's a Douay, and then you see that, when you're doing top of bedrock, basal till, heavy minerals, gold grain counts, all these other things, and the results are still pending. But when you see like your alteration, in a completely blind target, and it looks exactly like what you're seeing at Douay, and there's no drill holes into it, right? You're only drilling to the top of the bedrock. That's going to become an immediate target for, potential new discovery, follow-up as part of phase 2. And, I think Douay Quest is just one of quite a few targets that we have of that nature, right? Like we drilled this one because the team felt that it was worth putting a hole and allocating meterage to based on the strength of the anomaly. We were encouraged by what we found there, but I think we've got more to do, and I think the Sonic program will help guide us even further, as well as some of the summer work that we're doing in terms of bringing a few more of those targets to light as part of the next phase 2 program.
Does what come out of the ground here change the way that you'll be doing targeting for new targets or for step outs from here on out? Because I suppose even a miss is not a miss if it gives you geological data and it helps you prep for the next drill program, right? So does it change anything in terms of targeting for you?
You brought it up perfectly. That's why I smiled, because I said a miss is not a miss if it gives you good geological data. Let's think about that for a second. If you get good geological data, but then you don't actually process the data, then it's a miss, right? Yeah. Because the data itself does nothing until somebody's gone in and they've put a section together, right? Some smart geologist has come in and said, listen, we were looking for this, but we found this. Why? Did we see evidence? One of the things we've done with our structural model is we were looking for evidence in all that drill core that we relogged. Do we see evidence for a fault? Because I think one of the thoughts on the Douay deposit was there's the Casa Berardi North fault is going right through it. We went back and looked at, almost 30,000 meters, 10% of the drill core that we relogged. We didn't see evidence for the Casa Berardi fault in any of that drill core. So we think that Casa Berardi fault is actually located a bit north in the sediments, Taibi sediments, which is why we actually staked additional ground You notice in after we put the April results press release out, we did come out with we had added quite a few claims in north of where we are at Douay, and those were strategic, right? That was a low cost way for us to pick up additional ground that was prospective. This is a new style of target, which really is relatively undrilled. It is that sedimentary hosted. Most of the gold, for example, at Malartic, yeah, you've got this lithotectonic boundary between sediments and volcanics. In our case, all the mineralization that's been defined is really defined within these volcanics and volcaniclastics. In the case of Malartic, it's all in the sediments, right? And so our sediments are not drilled at all. And so when we take these kinds of geologic data, certainly we're happy. I came out and I say this again, when your targeting model delivers 100% success rate, especially with the kind of step outs that we were doing, that is a great validation, not only of the team, but of the model, right? And if we go out and we drill things that maybe are slightly lower grade, it's hinting at the fact that there's just a big system here. And it's a system that, has no fatal flaws, has no red flags. It's just got what do they say? It has all the elements of a potential tier one, world-class district scale gold deposit. It's just a matter of giving ourselves the time and the resources to express its full potential, right? And when I say that, while I would like to see 25,000 meter a year drill programs, one of the things that I think investors can really look forward to with us is we aren't ever going to sacrifice. We're never going to turn to that company that just talks about the number of meters, the number of rigs. It's about what are those dollars that are going in the ground? What are they actually delivering, right? If the team doesn't have the thinking time to properly plan the holes, to properly execute, to properly take that data and think in real time and adjust the program to say, okay, we hit this or we didn't hit this, and what do we? Then you're like an automaton. And geology is about thinking on your feet, right? The best tool that we have as scientists is our observational skill. And some people see things in drill core that others miss. We have a big deposit with lots of data, but that data was not being utilized to its fullest capacity. And so the fact that it is now, and we're able to produce results like what we did over this last drill program, only hints at what the potential of this is. I will never arm wave about just, look at all the blue sky, give us the immediate re-rate. We have to go out, we have to show it, right? I do believe that, a 7.5 cent, 8 cent stock, with $35 million market cap, with the success that we have with all the things that we've ticked off earlier, if we consistently deliver good return on investment driven exploration results and de-risking of the deposit, that's how we get there. But yeah, to your point, like misses are never misses here, right? Even if we were, sometimes in this market, which is weird, is you might actually hit and then your stock goes down, right? So yeah. We don't really, because sometimes the expectation is there, or sometimes the market isn't being guided properly. We had a program, if going back, you followed the stock, we had a deep drill program that was, a lot of arm waving about potential of the system. There wasn't a lot of vectoring, there wasn't a lot of geologic modeling to go decide what those targets were. They were like, okay, we've got gold, we're going to go deep and find the system. They spent $5 million plus, maybe more. And the stock went down by half. Because again, to the point of like, what was the concept, right? If you hit a screamer hole that's got massive grade and thickness at those depths, all of a sudden it's like, massive 100 million, 200 million, 300 million market cap company. If you miss, you just wasted a lot of capital, right? Because you didn't get, I'm not saying it's not data that we can use at some point, but those deep drill holes, I can tell you, they're not really going to inform a lot of our forthcoming MRE update, right? Because they're so far outside of the footprint of the Douay system that they don't really give us any useful data as of right now. So I think we're making good effort to try to take that, knowledge and bring it into all of our decision making and planning with a real focused goal of delivering a 5 million ounce deposit, and a deposit that has a mine life and a profile that Maple can develop as 100%, owner, and do it in a credible way that delivers return for shareholders.
We touched upon Joutel a couple of times. You're, talking about an MRE and a small fall program there. Maybe we can kind of summarize everything that you've got kind of in the back of your head, or what are you going to have going there? When does it start? How much money do you spend on it? When do we see some assays? Just kind of, a summary of what's happening at Joutel.
Yeah, the permitting targeting work is well underway. We actually, similar to what we did with our Douay program, we're working with a consulting group out of Saguenay, Quebec, which is a lot of familiarity with this part of the world. The principal there has actually done his master's thesis on a deposit that's right next door. So their team and our team are working together, submitted our ATIs. We're doing consultation work, as we always do with our First Nations partners, to make sure that we're in a position to drill a Joutel this fall. In parallel with that, we have been working with a resource a consultant here in Vancouver, who's given us an internal take. We've rebuilt block models based on all the existing data that we had as part of the JV, and then additional data that we repatriated from Agnico when we became the 100% owner at year end. And we're excited. Listen, as I said, we get zero value for Joutel, even though it's a past producing, high grade mine complex that was Agnico's first. And, when I talk about what the potential of that could be, at best, it could be a second flagship asset for the company. At worst, it might be just a high grade sweetener that can augment a central mill. If you're mining, a gram or a gram and a half material open pit at Douay, and you've got, 250 to 500,000 ounces of low hanging fruit that's at 4 or 5 or 6 grams, that may actually make for a better overall grade profile, right? And so when we look at our future work at Joutel, it's with the understanding that the majority of the company's valuation is really driven off of Douay. Finding something else like Joutel where we think there's value, but the market doesn't see it, we have to go and prove it and demonstrate it. So I think a great way to start with that is to show what is that potential resource, based on the data that's there. Remember, nobody has really, other than a few long sections that we put on, we've released publicly, and we picked up the Eagle property back in 2021. We did a program at Eagle in 2022, which showed some pretty nice similar style, V4 mine horizon type, higher grade drill results. But this data was really never seen because it was sitting in bankers' boxes in Agnico Eagle's Val-d'Or office in analog format until, we formed our JV in 2021. And then there was a bit, again, arm waving on what the potential of that, system could be. But with 100% ownership of the asset now, going back in there, doing responsible exploration and development of a past producing mine complex. I mean, if a company started today with just that Joutel property, it would have significant value, right? Just in terms of what it is, what it was, and what, when a mine shuts down in a lower gold price environment, it's fair to say, I think we've seen this a few times before, that, gold price can make a lot of things that used to not be economic again. Especially when, that cost that I mentioned earlier, when we're thinking about Douay, you have underground infrastructure here in place. Certainly it needs to be dewatered. Certainly there is a cost associated with everything. But if the grade and tonnage is significant enough that it makes it worthwhile, and we can go back with a drill program. And again, it's a small program, right? We're not going in there and saying we're going to do 20,000 meters at Joutel right out of the chute. Yeah. I think we have visibility that there is going to be a maiden resource as part of this MRE update that starts to get people focused at what is the potential as Joutel. And then even this drilling that we expect to start in the fall, I think assuming that we start that in September, I think you see assay results coming back from October on. But as I said, that Joutel program is going to be done, looking at our budget, looking at the quality of the targets we have at Douay as well, which we already have permits for and ATIs already approved. The mix of what we're going to drill at Douay with the follow-ups for phase 2 versus what we're drilling at Joutel. I mean, that's going to be coming up in a subsequent press release. We'll be very clear on what we plan to drill. So both of them remain very viable targets.
Well, I guess I'll wait for that news release, and I'm sure we're going to follow up on the back of that as well. You're also picking up some more ground, though, if I'm reading that correctly. Why? What's the plan there?
Yeah, I think I just started to hint at it. There's a structural corridor here along the Casa North Fault, and we've put out in our company presentation and some of the technical presentations that we've done, we've put out this structural interpretation of what we think is really driving and bounding the Douay deposit. It's very interesting that the mapping work that we've done, that the sort of, we have more work to do certainly, but we saw open ground in Tybee Group sediments that seems to straddle. There's banded iron formations there. There are other geophysical things that we see based on our regional both government data plus our own surveys that we've done that show that the potential extension of a Douay deposit. We're obviously looking at this 2025 Sonic program. We're looking at the geochem and geophysics work we did on the western half, and this new structural corridor in the Tybee Group sediments that we staked. I mean, we staked those at an overall cost of, less than $15,000, right? So we just tied up we increased our land position by 17%. And we did it in an area that we think is very prospective. Now, again, you could also argue, well, why would you do that when you're not getting any value for your blue sky? And we would say, listen, the risk reward calculus of spending 10 to 15 grand to lock up a big chunk of ground that we think we have potential to find another Douay on. To me, that's a risk I'll take every day. Now the priorities of getting in there and, identifying, like it's just new territory for us. So it's not like we're going to just go in there with a 25,000 meter program, as part of this next, drilling season, right? It's their targets that need to be identified. The same good geoscience and exploration best practices that we're using at Douay, at Joutel, and regionally. I think we want to prioritize the execution of this, demonstrating a 5 million ounce resource and a mine plan. But we never want to lose sight of the regional exploration potential here, which should also be a priority. And again, if we were a bigger company, we'd be doing both, right? And so we're doing both, even though we have limited resources. We're trying to show we believe in the potential, right? And if we have the capital ultimately to go and test some of these targets, I mean, this is where your game-changing discoveries typically come from. Is something that nobody's ever really drill tested before. Maybe it's like a Great Bear. You're drilling in the wrong rocks, but you find something new and unique that makes people sit up and take notice, right? It may be sexy exploration with the right kinds of rocks and the right structure and the right territory, but we already have an established resource, right? We're not just a greenfield explorer. So yeah, I think it was big value add though. If it does turn into something, the return on investment, I think, will be substantial.
Right. Not something, again, you're planning on drilling imminently, just kind of coming up with targets at first, though, as far as I understand it. That's all fine. Correct. How's you mentioned Agnico there? I'm just kind of running through some of the topics because I think we've covered the main things, but there's also a couple of smaller things that are worth touching upon, I think. How's the relationship with Agnico going? You said you just had a good presentation with them. What did that look like?
Yeah, I mean, it's, a standard update on, where we are, what we've learned with the last drill program. I think it certainly, we put out that press release we put out in July. It is similar to what a larger company would do. I mean, again, when we say we're punching above our weight, there was real analysis there. We weren't just going one drill hole to drill hole. We're trying to show that what we've built in terms of an understanding of the Douay system with the work that we've, and Agnico obviously with their $4 million of equity financing in June of last year funded a portion of that program. So we showed them essentially what did we do in the first half of this year, what did we accomplish at Joutel and Douay, what did we learn, and what are the next steps, right? Kind of similar to the conversation that we're having here, but with a little bit more visuals and a kind of a good back and forth. And we always get, despite the fact that we're a small company, they are busy. You can imagine they just released earnings last week. They were spectacular. I congratulate them to continue to outperform. It's a result of not only great people executing, but just I don't know. I think Agnico's always been that kind of company that people really root for, and how they do things and how they treat people, their respect for the community and the environment. Those are things that we model ourselves. It's a blessing for us to have a partner of that caliber and strength. And I never take for granted when I have their time. The fact that they give us time, it shows that this is not just a set it, forget it type of an investment, that there actually is a lot of collaboration in terms of technical knowledge sharing. And, certainly from, what a difference a year makes, to go from, a project that, we're trying to find a path forward on to a win-win structure, to raising proper capital, to, executing a drill program with real, technical insight. I think it's fair to say our partners see a lot of progress, right? And that's what's keeping, even though my share price doesn't always get me excited, but I certainly see the opportunity there when I get good feedback from a partner with that caliber that knows also the history, because they've been a JV partner here, where we were and what we're doing now that's different. That's really rewarding, right? And so yeah, the collaboration continues to be excellent, and we're obviously one of many companies that they're invested in. So our goal is always to make sure that we're doing the right kind of exploration work. Obviously, it's in their backyard, so they know Quebec better than most people. And so, it's incumbent on us to come up with explanations, theses that we're going out and testing. And then, if we're successful, explain why. If we're unsuccessful, explain why, right? And where do we go from here? But we get great support from our strategic partner and our largest shareholder. So very pleased.
Are they showing signs of wanting to participate in future capital raises and keep up their share? Or is that something that you would want? How do you see that?
Listen, I can't speak to what they, it's their prerogative as to, they have an investor rights agreement that allows them to, participate up to 19.9 on future raises if they maintain a certain ownership threshold. They're able, that top up right is there, as well as a right to put somebody on the board, and that investor rights agreement is public. I think the current position of ownership, I mean, there are very few companies where they're right up against that 19.9 ownership threshold. And, one of the reasons for that is obviously when you have exploration success, if you're capped out at 19.9, you can only, support it, with there's not much room to go up from 19.9, right? So I think what happened for us was, we had them at 19.9 on the June raise. We did 5.6 institutionally. They allowed themselves to go down to 16.4. But again, the view was, we do good exploration. Everybody recognizes that, this is a project of merit that supports bigger budgets. And so I think in theory, them being at 16.4, I'd almost rather have them at 16.4 with the ability to, to support in a bigger way if they like what they see. Then right up against that threshold. And based on what I'm seeing, at least in terms of the level of collaboration, I mean, this is still very much a project of interest, right? And I think, I wouldn't be speaking for anybody, but I think it's fair to say that there's a dearth of not only quality projects with, these ounce counts and infrastructure and all those things, but there's a dearth of high caliber teams that can show that they can take something that wasn't quite working and turn it around. So I think you got a high integrity partner that's seen a lot of progress here, not just on the technical understanding of the project, but also fixing a company that was pretty broken. Mm-hmm. And what does that mean in terms of their support going forward? Like, I don't want to speak to that, because I think we've really established a relationship of mutual trust, and I think people should just look for what happens down the road as an indicator of what their levels of interest are.
Mm-hmm. What's happened to your G&A in the meantime? How's that been through the program and since you restructured the company?
We're right on target. So we had guided to, 2 million-ish for 2025 full year. We'll be putting out we have a meeting to discuss our Q2s, but just started to look at some of those numbers, and yeah, I'm confident in saying we're going to be right on budget this year. So great job to the team. That's not easy, right? It's easy when you start, getting into all the activities of drilling plus marketing, and it's easy to kind of let a few things slip, and companies come back and say, well, we were doing more. So obviously the costs are up, but we're really doing more with less. And I think, you certainly, when you go year over year, our marketing activities are up over 2024 because we have more to talk about. But we haven't blown out our, salary, all these cash components of G&A that we had shown you previously in terms of where we were down, in terms of travel, marketing, investor relations, in terms of, salary compensation, professional fees, things like that. I mean, we're doing more with less, and the team is doing an excellent job. So I think we're in good shape.
What is your budget for G&A for 2025?
I think we had guided just north of 2 million total, so about 150K a year sorry, 150K a month is what we had been talking about. And I think we're right on that.
Right. Okay. No, that's fair. What are you going to be doing for marketing over the rest of the year? Is it more because you have that updated resource coming, or what are you planning for marketing?
Yeah, we'll be in Colorado in September at Beaver Creek. I've done a lot. I'm a bit not road weary, but I've spent a fair bit of time in Canada and the US, making sure that there's good visibility on Maple because of not only what we've done but what's coming. So I look forward to seeing you. Obviously, I understand you're going to be in Colorado as well, in Beaver Creek. So I look forward to giving you an update there. We do have, of course, a few conferences coming up in Quebec. There's the technical conference at Explore in October. We'll be meeting with a lot of partners. We'll probably have some additional results coming out by then. So a good time to reconnect with the Quebec investment community. I'll be in Europe later in November at the Precious Metals Summit in Zurich. So it's going to be busy. I think there's probably an opportunity. I think the banks have done a great job as well in getting us in front of high caliber institutions that are looking for this kind of story in Maple. And so I expect I'll be out on the road quite a bit this fall. But those are the events that we have earmarked as of today.
Well, I think I've been through, again, most of the stuff that I wanted to talk to you about today. What is it that keeps you up at night, though? I'll keep asking you that every time we speak, but what if you had a magic stick, you could wave it at something and make it go away? What would you wave it
at? As they say, if it were easy, everybody'd be doing it. And it could not apply more to mining, but especially to junior mining in an environment where you've got an elevated gold price, where you've got, all the sort of fundamentals are there for a company like Maple to really thrive and succeed. And then you see certainly we're up on the year, we're up, and you look at us relative to the peer group and the benchmarks and other things, and you can always find the things to nitpick on. But remember, we were starting from a pretty tough spot, right? And the things I'd love to fix, if I could just wave a magic wand and fix the cap structure. Obviously, there's quite a few shares out. If I could, fix the share price, and people don't like to invest in penny stocks because they just put them in a bucket. Very few people have the bandwidth to really dive into the detail. For example, if a press release comes out and the stock trades down in the first hour, it's sort of indicating that it was a bad press release, right? Whereas all of a sudden, if it trades up dramatically, oh, that must have been great. Now there's a pile-on effect. So, but the market, as they say, is never wrong. Right, until it is. And so, I came from Yale where I did my MBA, and we think about, the efficient markets hypothesis. And, I'm not going to lament. I think free-flowing functional capital markets are what actually helps companies like Maple to tap capital to do the kind of exploration that we need to do. I don't find right now there to be, while there's a lot of money sitting on the sidelines, there's a lot of money kind of looking at strategically deploying in an area that's underappreciated in junior golds. I haven't seen it. It still continues to be difficult, right? I wouldn't snap my finger and wish it to be easier. Although part of me would like it to be sometimes. I think it's always hard to find great gold deposits because it's not a commodity that's abundant in the Earth's crust. That's why it's got so much value. I think there are still a lot of lifestyle and junior companies out there trying to raise enough to kind of keep the lights on. Yep. We're really trying to do something different. And so, I think we're doing a good job of differentiating, but, if I could wave my magic wand and fix all the things that, were sort of problematic when I started, there are a lot of things that I have fixed, which I'm really proud of. And the team certainly should be proud of. But there are some things in completing what I would say is the Maple 2.0 reset, full reset. But we'll get there. So I'm confident, and I don't lose a lot of sleep because you have to have the courage of your convictions, but you also have to enjoy going to work every day. And that's something I certainly do, coming to work here and leading a team, delivering good quality work, and opportunity is massive in front of us. So,
do you think that rollback is going to come with the new resource, though? Is that something you would want to see, and just essentially fix that number? I know you can fix the everyone who's holding stock or anything like that, but yeah, is that something you'd want to do?
I think catalysts have to be there for you to support, because again, I think, as a finance person, both of us would kind of look at changing the denominator of your, sort of in your calculation of your number of shares, shouldn't change fundamental value, right? There's a perception in the market that, rollbacks are negative. So you see a lot of companies that don't manage consolidations, and then, they end up trading back to, the pre-consolidation price, because it wasn't, somebody wakes up in the morning and says, oh, my shares are up, it was a 7.5 cent stock and now it's a 75 cent stock. I could, you never know, right? There's psychology, there's other things that are at play. I think when you've got real catalysts, when you've got clear momentum, that's typically when the ones that are successful do it. I think we show with the amounts of trading, and you mentioned we're trading over 500,000 shares on a daily basis on the venture. That's up dramatically, right? Our volumes are up, and we're seeing, accumulation and institutional interest, even though we're still below that $50 million market cap threshold. I think we just need to get that sustained momentum before I really would think about doing it. It probably has to be done. Nobody wants to be an Australian, billion share type, company that just trades at the pennies. I think there are some disadvantages to being a penny stock from a U.S. sort of trading perspective and other things. But we'll manage it and we'll do it properly. I think whether it's tied to a resource update or some other catalyst, I can't speak to. I do know that it's something that I recognize. It's not something that like I created, but it is something that I need to fix. So,
yeah. Well, good. Kiran, it's been a good update. I appreciate your time. I don't think I have anything else to ask you. What am I forgetting to ask you, though? What did you come here hoping to talk about that I failed to bring up?
No, I think we covered everything, and I appreciate, as always, your time, insightful questions, and I'm looking forward to a good catch up in person in Colorado in September.
Well, thank you so much for doing this. I appreciate your time.
You too. Thanks.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Oh, so unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."